You sit in front of a computer in your house, in your pajamas, sipping your favorite beverage, okay? And you complete these, 4 to 6 hours, how long it takes you to do the, home buyer education course. You do that. And then for doing that, you get up to 3.5%. True to be told, that is the minimum down payment on an FHA loan. But this right here could be a game changer, and it is changing the game for a lot of people getting into homes.
Your buyers will earn 3.5% of their home purchase price, up to $13,000 that they can use pre-closing.
You've never heard of down payment assistance like this on this episode of Major Money Matters. All right, welcome back to another episode of Major Money Matters. If it's your first time to the channel, we do welcome you to like, comment, subscribe, tell a friend, because we are uncovering some things that are making it easier for people to get into home ownership. And I'm happy to welcome my new friend, Eric Sackett from Attainable Housing Advocates. And we're going to get into this talking through one of their programs that they have. And I'll tell you, this is, when I heard of this, I had to have them on because I'm like, yeah, this doesn't sound right. Okay, so I wanted to really talk through this, and we're going to spend some time, picking this apart, figuring out where this is beneficial, because something I tell my buyers, no down payment assistance program is good for everyone. So we got to be careful about, how we navigate this and share this. And for your realtors out there, we just want to be clear about who this works for, and really who it doesn't work for. But this right here could be a game changer, and it is changing the game for a lot of people getting into homes. So, Eric, welcome to the channel. Thanks for agreeing to do this. Tell us a little bit about yourself, your background, and how you got into what you're doing now.
Sure. Yeah. First of all, thanks, Major. Happy to join you here. I know that you've found great success, and you're a great inspiration for many LOs, and I know your team does really good work. And I'll toot your horn for you. It sounds like you just closed your 100th deal this year, just a couple of days ago, right?
Yeah, it's been a good year.
That's fantastic. I love hearing that. I love hearing you're helping people. Yeah, so like Major said, my name is Eric Sackett. I live here in Arizona, so a little away from where you're at in Texas. I have 4 kids. I have been doing loans, not as long as you have, Major. I just jumped into this about a year ago. Okay. And I jumped in because of this product. This product is really a game changer for buyers in this market. Because I'm sure, you work with a lot more buyers than I do, but what are some of the biggest problems that buyers have getting into homes? What are the things that you're seeing?
Yeah, for many of my buyers, it's if we talk specifically my FHA buyers, or conventional buyers, the challenge is not enough money for down payment. If they have enough money for down payment, then they don't have enough money for closing costs. Yep. Even when I'm talking with my my builder partners, we're trying to figure out like, hey, how do I come up with the down payment assistance or something like that, and how do they pay the closing costs? And we found that in success in some ways, but sometimes with those down payment assistance comes the higher interest rate and things that people really are not comfortable with.
Exactly. Yeah. So Hoper was born because of some of the issues that you just explained, Major, right? Buyers can't get enough money to close on a house. They can afford their rent, but they don't have money to get in the house. But then also, what do they do once they're in the home? There's extra cost buying a home. There's going to be stuff that comes up. If there's any loss of income, then they're in a bad situation. And so Hoper was born and designed to really help buyers get into a home, to make homeownership attainable, but also sustainable long-term. And so FHA allows what's called an SWT loan that we'll talk a little bit more about, but it allows us to build a structure, a saving structure for your buyer long-term to help protect them from rising costs and to put more money in their pocket to help them build their savings and ultimately their long-term wealth. And so that's why the Hoper program exists, and that's what we're here to kind of talk about today.
Perfect. All right, Eric. So when we look at this program, okay, so before we get into the details of the program and what it means to the buyer, who's the ideal client or the ideal person who is going to want to do this or look into whether this is the right program for them?
That's a great question. People who need help closing are going to be the first ones to come to mind, right? Someone who's like, hey, I want to get to a house. I have $5,000, is it? And you're like, well, you're probably going to need more than that to actually get in the house. So that's going to be the first person that probably pops in your mind to help with. How the program's designed as a savings program actually opens the door for a lot more than just a typical FHA buyer, let's say. Because of the savings structure and because of how the money is earned with this particular savings program, it really is something to look at for any buyer that's looking to have a little extra cash up front and the cost saving structure on the back end. So the typical one's going to be an FHA probably that comes to mind. Someone that has low cash to close, someone that needs a little bit of extra help, but it can work for a lot of different clients depending on their situation.
Perfect. So to be clear, this is an FHA loan, correct? Doesn't work if you're going conventional. VA does not work. This is only on FHA loans.
Correct. Yep.
So let's talk about this. Tell us now, this is not technically a down payment assistance program, correct?
Correct. Yep.
Okay. Yeah, so tell us the details of it and how exactly it works.
Yeah. So essentially, Hoper's positioned as a savings program. And how it works is your buyers will earn 3.5% of their home purchase price, up to $13,000 that they can use pre-closing. So your buyers can apply that to whatever they need. That's earned income. And they earn that by participating in the research that Hoper is conducting.
So this is a research program. Okay.
Yep.
A research savings program, kind of.
Yep.
And this is not really a down payment assistance. So the money is being gifted to them as a grant?
They're earning that money by completing education courses. So Hoper is actually an acronym that stands for Homeownership, Promotion, Education, and Research. So they're conducting research looking at the positive impact that cash windfalls will have for a buyer, coupled with education, and what that does for the loan. The end goal is to reduce default rates. The end goal is to increase savings rates and reduce default rates. And so because it's positioned like a research project, your buyers earn that 3.5%, which means they can use it for any closing related cost, even replenishing their savings post-closing.
Wow. Okay. So you said the word earn, and I deduce that they are earning it through certain things. They're earning it through the completion of education. Okay.
Correct.
Tell me about the education. How long does it take them to complete it?
Yep. So it's really similar to other programs that you LOs, realtors might be familiar with. They take 2 courses. The first course is a home buying education course. It takes 4 to 6 hours to complete. It's all online. It's all self-paced. Once they complete that, they'll qualify for the 3.5%. So it's, in terms of qualifying buyers, it's really pretty simple to sign up. And
so let me get this right. You sit in front of a computer in your house, in your pajamas, sipping your favorite beverage, okay? And you complete these 6 hours of courses, okay? 4 to 6 hours, how long it takes you to do the, home buyer education course. You do that. And then for doing that, you get up to 3.5%, which, true to be told, that is the minimum down payment on an FHA loan.
Yep.
You get that. And really, I won't get into whether you can do it on the FHA manual and all of that stuff. That's underwriter stuff or loan originator stuff. But this is a way that you can get this money for a simple FHA loan. Okay.
Yep.
And you're not doing a higher interest rate or something like that. Now, what is the second component of this pre or post closing? This does have a solar component tied to it, correct?
It does have a solar component tied to it. So once the buyer's qualified for an FHA loan, they'll qualify for HOPR. The second thing to do is to check the home to make sure that it qualifies for a solar system. So the SWT that we talked about earlier, the solar wind technology, that's the loan that's set up through FHA. And so what we do is we build a $0 out-of-pocket cost solar system for your buyer. We roll it into the loan. So their mortgage is going to go up slightly. Their utilities are going to come down drastically. So their monthly payments are roughly going to be the same, but they're getting a brand new solar system post-closing that's going to help them save on their utility over the life of that loan, saving them average of about $125,000 across the life of a 30-year loan.
Okay, so let's get this right, okay, because we want to make sure we get all the details straight. So let's say a buyer is doing a FHA loan, they're doing an FHA loan, they're buying a $300,000 house, okay? So they're going to take their classes, okay, online, okay, and they're going to get up to 3.5%, which government math is going to put me at about $10,500, okay? $10,500.
Government math, I like that.
that they're adding. We're going to take that. Now they're qualifying at $300,000. Now we're going to add the $10,500 onto that. So they're buying a house at $300,000. The loan is going to be $310,500. Okay, right?
Almost.
Okay.
So we don't add in the income that they earn. We just add in the cost of the solar system. So a typical solar system through HOPR is going to be between $30,000 to $40,000.
Okay.
That's what's added to the base loan amount. So your buyers don't have to qualify for that additional amount. The home doesn't appraise for anything more. They are qualified for the home, and then we just add that solar component on top of the base loan amount. Okay.
So we're going to go back. $300,000 home. The loan is actually going to be $330,000 because we're putting a $30,000 solar system and it's being rolled into the loan. Now, for giggles, I will tell you that another $30,000 onto a $300,000 home is roughly going to be probably $150 more per month. Okay. Again, government math. Okay. So, extra $150 a month. However, because you're going to be having solar, you're going to have, electricity, that's going to save you on a monthly basis. Okay.
Exactly.
Now I know this generates all kind of questions and all kind of stuff. Put the questions in the comments. Eric's going to be on my YouTube page. And he'll answer these questions. We're on Instagram. We'll follow each other. He'll jump in and answer these questions and stuff like that. But if I'm hearing you correctly, Eric, I am an originator. Okay. We want to advise our clients correctly. Okay. So my thought is you do want the equity to build up to that 330 or something like that. This is probably not something that you want to do if you're, wanting to sell that home in like a year or two. Correct.
Yeah. Because the added solar, because it's an owned solar system, it will appraise in the home value. So it will add 4 to 6% of the home value. So it won't
depending on the area. Yeah.
Exactly. Yeah. Depending on the area. So, but yeah, typically it takes a year, 2, sometimes 2.5 years before they're ready to sell. So yeah, if you're looking to move out of in a year, 100% Major, you're right. This may not be the right product for you to use.
Perfect. Which states are you currently doing this in, Eric?
HOPR works in 46 of the 50 states. So North Dakota, South Dakota, Alaska, and Hawaii are the 4 states that HOPR currently does not function in, but all other states are are open and you can close loans.
Perfect. Excellent. Now let's talk timeline. If I'm working with realtors, we want to know how long is it going to take. Let's assume we did the pre-approval. The buyer said we're interested in this program or something like that. Hey, I saw that YouTube video and I think I want to use that to do my down payment. I'm going to get solar put on my house or something like that. Now you are putting a solar system on the house. Okay. Mm-hmm. So the house has to basically be able to withhold a solar system. Okay. That has to kind of make sense in the makeup 100%. Of the house. Okay. Now let's say I'm doing a $400,000 house and my down payment on that $400,000 is, let's call it, $14,250. Yeah. I cap out at $13,000, so I can still get the $13,000 towards my down payment. Correct. Yeah. Okay. That money again is earned income, so it can be used toward any closing related cost, or if your buyer has the money, replenish their savings post closing. Yeah. Perfect. Okay. Excellent. So let's go back to timeline. So timeline on this. Let's say that I've done my class. I've got that all set up. I did that in the pre-approval phase. I now go under contract. Okay. Does the listing agent or the selling side have anything to approve or anything like that, as a part of the transaction? Good question. No. So the great thing about this program is most of the stuff happens post-closing. So solar doesn't get installed until we close on the house, and all of that gets taken care of after they're in the home. So in terms of getting them approved, getting them in the home, it won't slow down any of the processes in getting approved, getting qualified, submitting the loan, and all those different steps. Because all the home buyer has to do is complete that education course. And like you said, they can do that in their pajamas, sipping their favorite drink, 4 to 6 hours. Once they've done that, then they'll get the certificate that says, hey, they finished this thing. And then that's when we'll send those funds to the project so that they can have those funds for closing. Perfect. Now, after they close, when does the solar installation process start? Yeah, good question. So we have solar partners in every state that we facilitate. We have typically 2 to 4 lenders, 2 to 4 solar partners. And FHA says we have to put the solar in within 120 days post-closing. Okay. So we found partners that will do it much quicker than that offer the right guarantees and warranties, that have the certifications that they need to be compliant with the FHA guidelines. But 120 days is the max amount of time post-closing that we have to put the panels up on the roof. Perfect. Now, I'm thinking about this, and I'm actually gonna send this video, Eric, to some of my new build partners. Yeah. So you're telling me that you can, if they've got a buyer who's might be a little low on cash, we can do the HOPER program on a typical FHA loan. So this is a typical everyday FHA loan for the builders, purpose 203B, good day, a typical FHA loan. And you're only limited to basically the processing time of the originator, because this is a typical FHA loan, right? Yep, 100%. So a typical, 21 to 30 day contract, standard contract, you're going to be fine. Easy day. Easy day. Yep. You won't have any complications, or the assessments are fairly quick. Once we get an address, it takes maybe an hour or 2 to get our partners to reach back out with that assessment. And it's non-commissioned. So there's no buying in. We just are getting numbers, right? And so it's a very quick process. And the benefit to you and your partners and the people we work with is I can help be an extension of your team to work with home buyers, to work with builders, to answer questions, to interface with them, to make sure that they understand the process, understand the program, and have everything set up and ready to go. Wow. And then after the buyer closes, the solar is put on the house. Okay. Yep. They own the solar panels. Yeah. And so honestly, sorry, I cut you off, but honestly, that's the biggest benefit, because if you've been in real estate or if you've done loans and you've had to deal
with a home that has a solar lease or a solar rent, or someone has to assume a solar loan, it's really messy. It's really challenging because they own the system. All it does for the buyer is it gives them utility savings for the life of the loan and increased in their equity because it's like an upgrade, like a new kitchen or a pool or something like that.
Yeah, I really, really like this program. As it originated, the challenge becomes, Eric, number one, the higher monthly payment. Okay, that's the challenge on most of these DPA programs, the higher interest rate. So if you're still giving the same FHA loan, and you're giving this as a benefit, I think this is absolutely amazing for the buyers. Even if you have someone who says, hey, I've got closing costs, but I don't have the down payment. Or if I plan to stay in this home 5-6 years plus, if I've got the money, but I don't want to spend the money. And this is kind of another way to just financing solar into your loan, into your home. It's just kind of common sense, especially if you own the system. I think that's amazing.
Yeah. And another thing too, and this is where honestly, Major, I get excited because you're spot on. You're 100% correct that it makes sense for so many buyers because owning your power is going to become more and more important. Power is becoming more expensive. Annually across the United States, utility rates are rising at about 4% annually. Yeah. In Arizona, they just announced 14% is how much the rates are going up next year for some of my customers here.
Wow.
And so what we're doing is protecting buyers against those extreme rate hikes, which is where they're going to see a ton of savings down the road. What you're like what you're saying.
Wow. Yeah. Hey, Eric, I wanted to give people a little bit of a taste for this. And I think, we've gotten the baseline stuff out of the way, but this is an amazing program right now where we're talking, hey, affordability, down payment, et cetera. And I'm a broker, Eric. So we have our wholesale lenders that we're working with on this. I think we have about 2 or 3 of our wholesale lenders that we're working with. Have we expanded past those 2 or 3, or are we still at about 2 or 3 lenders that we're working with on this?
So right now, EPM is one of our partners, the Loan Store, Nova Loans we've added, and then we have 2 other wholesalers that are currently in talks we're close to getting them across that finish line, but they haven't announced officially yet. So I can't say necessarily who they are, but we have 2 more there's a 95% chance that in the next month they'll be available too.
Wow, I'm excited about this, Eric, and I'm excited about it. So what we're going to do, there's going to be snippets of this posted on Instagram. We're going to post this on LinkedIn, and then we're going to post this on YouTube, and people are going to comment. I'm going to ask you to come back and answer questions and stuff like that, because this is your baby.
Absolutely. I'm happy to help. However I can support you, Major. I want to bring more business your way and help home buyers. So whatever I can do to help you, I'm all in.
Awesome stuff. And Eric, thanks again for being on the channel. If you got questions about the HOPR program, if you're a buyer and you're looking for, an extra 3.5% towards your closing costs, a standard FHA loan, or if you're a realtor and you want to talk with me and Eric about how to promote this to your buyers and stuff like that, reach out to us. We'd be more than happy to help you, because this is all about getting more and more buyers into homeownership. So Eric, thank you very 100%. Much for being on, my friend.
Absolutely, Major. Thanks so much. Thanks, guys. Appreciate it.
All right. We'll see you next time on the next episode of Major Money Matters. God bless you.